I think everyone thinks they're keeping their powder dry, but to us, like fiscal can only do so much. The monetary side, I think, as you just touched on, can only do so much. Like we here are still waiting for real reforms in China. I mean, the private sector remains scarred. They remain scared. Monetary policy cuts of 10, 20, 30 basis points, a trillion, 2 trillion, 3 trillion yuan of stimulus, like is only going to do so much. Until we get to see real reforms that bring the private sector back willing to invest, like the situation is going to continue to be pretty bad on the ground.
So I got to ask you, though, having said that, though, at Morgan Stanley Investment Management, I'm sure you've cottoned on to the fact, as have a lot of other people, that, Japan, you've got corporate governance, that narrative, which has been very positive for the market. In Korea, you've got value up. In China, something similar happening as well, more with smaller companies, more tech-leaning companies, and certainly not state-owned companies, right, where the companies are being run much more for the benefit of shareholders and stakeholders. I mean, they are cognizant of that fact, and a lot of folks are cottoning onto that. What about you?
No, it's true. I think if you look, the companies, the sectors that are still less state-run, right, like state-managed, they're doing much, much better. It's just the problem in China is that there are less and less of those sectors, right, less and less of those companies, right? And so until the state sort of takes its hands off and gets its hands out of a lot of the companies and the enterprises, it's going to be tough to see like real durable investment into the country.